What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we did see selling across the board. Is the market starting to roll over, and is the correction finally here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today on SPY we were down 0.12%, and we did get price action closing below the 5 EMA for the second day in a row. And we did close just below that support level at 451. So SPY definitely looks like it could be starting to roll over because we're starting to lose some of our support levels. Now overall, in the grand scheme of the trend, we still do have a bull trend and we still do have price action above critical support. Remember, critical support in this bull market is going to be our 20 simple moving average, and that support level is now sitting there at 448. So technically speaking, as long as SPY is above critical support at 448 and we still do have the bull trend, this still could be a bull market that wants to go higher. However, you need to be very cautious because at these levels, it is possible that we're going much lower, and we still do have this gap below that won't fill until we go back down to 443.7. So there's plenty of downside risk, and if we do lose critical support, it's always possible that the selling picks up momentum and we start to see more high volume selling. Now we were barely down today, but we still do see volume increasing. Some of that volume was obviously buying the dip, so overall the price action is not bearish by any means. It's just potentially an early warning sign that we could be rolling over. Jumping over to the 1 hour chart, we were talking about the possible double topping pattern just last night, and you could see that we did finish out this double topping pattern. We came down here and we did take out the neckline, which did confirm we were double topping, and from this move we usually will repeat that move to the downside during a double top, and as you can tell, if I copy and paste this arrow, we did go about the same exact length from the high to the low below the support level, and we did bounce off of that support at 449. So technically speaking, this double topping pattern on the 1 hour chart already completed, and we did bounce off of that support level. Now the only thing that's concerning on this chart is if you look at the 1 hour chart, we are still forming lower highs and lower lows, and as you know, lower highs and lower lows are how you define a downward trend, and downward trends are what you see in a bearish market. So in the daily chart, we are still bullish, but as you can tell in the 1 hour chart, we're starting to see signs of a downward trend, which could be an early warning sign the market wants to roll over. We already saw a double top and we're starting to see a downward trend, and we are seeing price action currently getting rejected at resistance. So we really need to see SPY getting back above 451 as early as tomorrow to start reversing this downward trend. So jumping back over to the daily chart, you can see why that 451 resistance level will be critical. We need to see SPY breaking back above 451 and trying to break out to brand new all-time highs. The longer SPY sits here and goes sideways, it could try to correct through time, but more than likely it increases the probability we'll eventually see high volume selling. Remember, the stock market takes the stairs up and the elevator down, and you can get these very quick sell-offs that only last a few days that come all the way down to critical support. So as far as support level goes on SPY, watch that level at 449, 448, and below that we will have strong support at 446 and the gap close at 443.7. Below the gap close, the 50 EMA will be the next strongest support, and that level will be down here at 441. If we can break out above resistance at 451, we will have resistance at the previous all-time high just above 453. Above 453, we could continue to run higher towards our next price target at 457. So right now this market really could go either direction, and in the short term we do have a downtrend. So watch support very closely, because if we continue to blast through support levels and forming lower lows, that does increase the probability that the market is rolling over at these levels, and we already did see the stock market top out on September 2nd. On the NASDAQ 100 triple Qs, we were down 0.35% today, and again getting rejected at that resistance level at 382. As you can tell, 382 has been a very strong resistance, and we haven't seen the triple Qs blasting through that level, which does mean that could be the top for the triple Qs until we see price action breaking above that level. We always want to look for 2 price action breakouts above that resistance level to confirm we're going to the next price target, which is up here at 388. So right now you don't want to pay attention to 388 until we get a decisive break above 382. To the downside, we have support at 376 and our 20 simple moving average is right at 373. So the most critical support level will be 373. Below that, we still have support at 370 and the gap close at 368. And the 50 EMA is now sitting at 366. If I jump over to a 1 hour chart of the triple Qs, you can see that we still do have this potential double topping pattern, but we did not get a decisive breakout below the neckline just yet, so it's not a confirmed double top. Remember, SPY already confirmed the double top, and we did meet the double topping criteria of going the full length of the move of the neckline breakdown. So if the triple Qs were to break this neckline, we could easily see a move that takes us down to critical support, which could be right around 376 to about 375. So look for that breakdown below 379 support that could take us to triple Qs levels of 376 and potentially even lower. This is the exact same double topping pattern we already saw completing on SPY, and it could just be that the triple Qs are lagging behind, or we're never going to get the confirmation break below the neckline. So jumping back over to this daily chart, you can see that will take us down to this critical support at 376 if we do get the confirmation of the double top on the 1 hour chart. If we break out above 382 and start running higher, the double topping pattern is no longer valid because we no longer have the double top. So look for that price action because that will help you decide which direction the triple Qs are going. We did go down on increasing volume on the triple Qs, going down 0.35%. On a day we see volume increasing. So remember, if we see high volume selling, that's always going to be a bearish indication, and it could increase the probability we slice right through critical support and continue to go lower. So watch the price action very closely because it will tell you everything you need to know. And because the trend is bullish, the price action will be your very first early indication that the market is rolling over. On the Dow Jones, we were down 0.2% today, and we see the Dow Jones closing below critical support for the second day in a row. Remember, critical support was our 20 simple moving average at 353, and now that we're below our 20 simple moving average, the next most critical support is the 50 EMA sitting here at 350. Intraday, we did bounce off of that support level, but we're getting very close to breaking below that level, which could mean the Dow Jones is rolling over. We did lose the bull trend, so the Dow Jones is already starting to look like it's rolling over, and the price action is looking very weak, sitting down here at critical support and not seeing a very strong bounce. So the price action on the Dow Jones is hinting that the stock market could be weakening, and we need to see price action getting back above resistance at 351, and then we need to break back above 353. We don't have the bull trend, so the price action could be very choppy in this range. We will still have strong resistance above 353 at 355, so the trading range for the Dow Jones is anywhere between 350 and 355. Below 350, it will look a lot more bearish, and you will want to pay attention to the strong support level at 348. Below that, we could easily close the gap at 346, and it will look like the Dow Jones could be going into a bear market. We'll have a lower high and a lower low at that point, and it will look like the Dow Jones is going much lower, which could be leading the rest of the stock market lower with it. In the Russell 2000, we were down over 1% today, closing just above that support level at 224, but intraday we did test the 50 EMA as support, which is just above 222. So we're getting into the pretty strong critical support areas for the Russell 2000, and we did open a small gap just above that won't close until we get back up to about 226.3. So watch that gap above, but don't forget we also have a gap below at 216. If we break below critical support at 222, it's very likely we're coming back down to close that gap at 216. We still do have support at 219, so watch that level as well. And to the upside, you want to watch resistance at 227 and 230. Remember that the Russell 2000 does not have a full bull trend, and the price action is still chopping around between 212 and 230. So this is still just a sideways choppy market, and you need to watch these critical support levels closely because it could mean the Russell 2000 is rolling over. In the ARKK ETF, we were down 2.84% today, and we see ARKK slicing right through that support level at 123. We retested critical support down here at 120, and so far we are holding up above that level. If we see ARKK breaking below 120, it's very likely we're coming down to close the gap at 116. So watch that gap fill if we get price action below 120. To the upside, we now have resistance at 122.75 and 125.6. We need to see ARKK breaking back out above 126 to start looking bullish, and we don't have the full bull trend because the 20 simple moving average is still below the 50 EMA. So overall, ARKK is still bullish above 120, but it's getting very close to breaking down and starting to look like it's rolling over to come down to close the gap. We're seeing selling on increasing volume, which is always going to be a warning sign, because selling on higher volume is always possible we start to see panic selling, so pay attention to the volume on red days because if we continue to see more high volume selling, it could mean that we have a lot more downside. On the VIX, we were down just about 1% today with the VIX closing just below 18.2, so that resistance level on the VIX is holding up. Remember, as long as the VIX is below 18.2, it's completely normal volatility, which means that it's just a normal stock market pullback. If we start seeing the VIX breaking out above 20 and closing above 23, that's when the stock market pullback can turn into a stock market correction. So right now, this is still completely normal volatility, but there's still a warning sign in the VIX that you need to pay attention to. From the last that we can tell, the VIX is forming higher lows, and it's still in a consolidation wedge of lower highs as well. So that does mean the VIX could come to the top of this wedge, which is right around VIX levels of 21, which does imply there could be a lot more volatility coming to the market. If we see the VIX breaking out to the upside and breaking above 21 and closing above 23, that means the stock market pullback could turn into a deeper stock market correction. So there's a lot you can learn from watching the VIX and watching these critical levels. If we see the VIX breaking back down below 16 and heading towards 14, that will be a bullish indication that the stock market is going to new all-time highs. On Bitcoin, we're currently down about 1.8%, and we do see Bitcoin holding above that support level at 45,000. The bad news is that Bitcoin did lose the full bull trend, so the price action will get a lot shakier down here at support. If we lose support at 45,000, it's still possible we have support at 43,000 or 40,500. Below that, it could get a lot worse, and we could lose support at 37,000 and come all the way back down to that $30,000 support level. So remember that I said if Bitcoin breaks out above 51,000, we could start running to brand new all-time highs, but so far this is starting to look like it was just a false breakout. We need to see price action getting back above 51,000 before we get bullish on Bitcoin. At this point, we did lose the bull trend, so we need to watch these critical support levels. If we start breaking below the 50 EMA at 45,000, Bitcoin will look like it's rolling over, and all of this selling is happening on increasing volume. So overall, Bitcoin could be an early warning sign that the stock market also wants to sell off, because Bitcoin is a very good measurement of risk, and right now Bitcoin is looking like it's going risk off with a lot of people exiting Bitcoin. So be very cautious at these levels, and be even more cautious if Bitcoin breaks down below 45,000. On Amazon stock, we were up 0.46% today, and we did get a confirmation price breakout above the resistance trend line. Remember that resistance trend line today was right around 3,500, and we closed about 25 points higher at 3,525. We also did close more of that gap above, so we will still have resistance at 3,552 and the full gap close at 3,580. Above the gap close, we could start to run in 3,700, or we could be due for a pullback. Remember, if we do get a pullback, you want to watch for the support at the 50 EMA, which is down here around 3,400. Below 3,400, we could come back down to 3,311, but we are starting to build up some bullish trending. So this 20 simple moving average is still needing to cross back above the 50 EMA to have the full bull trend, so watch for that development as well. Overall, Amazon is looking bullish, but it has gone very far since the bounce off the low at 3180, and it could be due for a significant pullback in the near future. So look for that gap close at 3580 to potentially trigger another pullback. On Tesla stock, we were up 0.13% today, but intraday we did get to that price target up there at 765. We were only about 50 cents away, so that is very close to hitting that target. It's still possible we bounce and hit that price target fully, but overall I would call this price target met, and I would be more concerned about the gap below at 734. Remember, we still have strong support at 732, and these gaps typically do get filled, so I think there's more downside risk on Tesla than there is upside potential at this point. If we do break out above 765, we could start running to about $800, but I just want you to be cautious of this gap below, and if we break below support at 732, we'll still have strong support at 714 and 692. So watch those support levels closely if we do start to see Tesla rolling over from this resistance. If we break out, look for price targets up around $800, and that will be your next potential possibility for Tesla to start pulling back. On Apple stock, we were down about 1% today, and we see Apple getting rejected off of that 157 resistance level. Remember that this is my price target on Apple, and I don't think we need to go higher than this. However, if we see price action breaking out, we need to follow the price action, and the next price target above would be 162. I don't want you thinking that Apple has to get to 162, because like I just said, price target was at 156 to 157. If we break out, follow the price action, and it does mean we could continue to go higher because we still do have the full bull trend. To the downside, now that we're getting rejected at resistance, it does mean we could be coming back down to support. So watch 151 to about 150 as potential support levels. Below that, you have the 50 EMA at 146, and below that, you have the gap fill at 137. On the financial sector, we were down about 0.25% today, and we did test the 50 EMA as support, and we did see a positive bounce off that level. We lost the bull trend, but so far the support level at the 50 EMA is holding up. On the industrial sector, we were up 0.14% today, and we still have price action below all the moving averages, and we're starting to see the moving averages starting to cross over to the bear side. So the industrials need to start bouncing back over the 50 EMA very soon, or they could be in jeopardy of going into a bear market. The healthcare sector was down 0.04% today, closing just below the 5 EMA, but still holding on to the bull trend. It still looks like the healthcare sector is stuck in a sideways consolidation, with the potential that it did double top and it could break down below the neckline. The energy sector was down 1.28% today, back below all the moving averages and very close to going back into a full bear trend. If the energy sector can't bounce back over the 50 EMA, it does look like it will be going into a bear market and potentially coming back down to close the gap below. So jumping back over to the S&P 500, there's definitely some concerns in the sectors, and it does look like the industrial sector is already starting to roll over, which we do see in the Dow Jones. The financial sector is at critical support, and we're starting to see the tech sector meet a lot of their critical price targets on stocks like Apple. So be very cautious in this market, and remember there's always the possibility that SPY is already starting to roll over, and we're starting to round out the top, and we're very close to breaking a critical support level. So watch the price action at critical support, because that will be your very first early warning indication that the market is breaking down. You always want to stay objective, and you always want to follow the price action and the trend. And right now, the price action and the trend are still bullish in the daily chart. On the 1 hour chart, we see a little more concerns with the 1 hour downtrend, but that could easily reverse as soon as tomorrow. So watch the resistance levels above to see if price action can break back out above them. Just play this market day by day and don't take anything for granted. Remember, it's always possible at these levels we're due for a pullback, and a pullback can always turn into a correction. So you just need to stay diligent and patient, and remember that you are in one of the typically most bearish months of the year going into September and even October. So be defensive during these next couple of months and be patient. Also, don't forget that I do have my own trade alert service called Bank Trade Alerts that only trades TQQQs. It does very well in all market conditions, but exceptionally well in volatile markets, and I'm currently running a 50% off promotion code for your first month, so now could be the best time to try out Bank Trade Alerts. If you're interested in joining Bank Trade Alerts, you can find out all of the details and how to join by clicking on the links in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis to help you navigate this market and stay on the right side of the trade. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.